Greetings and hello and welcome to my channel. Today I'm going to share with you how to invest in one of the ETFs called XUS. Basically, XUS is the ticker name for this exchange traded fund. And before we get started, I just want to disclaimer that this is not investment advice. This is educational content made with the view that this will just strictly provide some educational um, benefit to all of you who are watching this. Now, in terms of the agenda for the day, you can see on the screen that I will introduce what is XUS and also the composition and walk you through how to buy this ETF. So hang on and see how this process goes about, including the risks and benefits of holding this particular ETF. For those who don't know me, my name is Isaac Jonas. I started Streetwise Economics with the goal to share educational content like I'm doing now. I like writing books and I'm also a retail investor. Particularly, I invest in the US and Canadian stock exchanges starting from around 2020, and I'm so excited. So XUS, which is the ticker name, it was launched in October 2019, and it is managed by BlackRock, which is one of the top firms, that manages funds around the world. And it is also traded in both the US and Canada. But for me, I like buying this ETF in Canada because as a Canadian, then I don't have to exchange the money to US dollars like I do in some cases when I buy those securities that are dominated in US dollars. So I also have to disclose that I own XUS as part of my portfolio. And according to the information that I found on BlackRock website, in terms of the net assets of class, it has about 147 billion dollars worth of assets, this particular ETF, right? So it is a very big exchange traded fund. And exchange traded fund, basically what happens is investors put the money together, and then this money is then managed by the fund manager, who can then decide to buy different asset classes depending on the goals of that fund. For example, they can buy equities, bonds, treasury bills, and over time they can then work towards their goals, and they will be working mostly for registered firms like BlackRock and Vanguard. There are quite a number of them. And what is important about this exchange traded fund is that it also offers some dividends. So you notice that every 6 months you can get about 1.3% yield. In other words, if you have money that is invested, right, you expect to get a yield from this, but it can change from time to time, right? And it is appropriate for those people who are looking to invest for the long term because of the low fees and other benefits that come with it. Now, the key things or facts about this exchange traded fund is that hypothetically, if you had invested $10,000, let's say in when it was started in 2019, what it means is that this money would be around about 17,000. But you can see that it doesn't go in a straight line; it goes up and down. So you people sometimes potentially lose money because when it drops, then they can get out. So as a long-term investor, when opportunities like this happen, I keep on adding funds. Like what I did in my portfolio, I was pretty much adding shares in 2023 when it was dropping, right? Because I have a long-term view, so this can actually help in terms of the overall return over the long term. So the key benefits from this, you can see that you have exposure to over 500 US large capitalized companies in the US, and it has low cost, as you see, in terms of the fees, because fees, they reduce the annual return. And then it is also designed to um, mimic the S&P 500. And like I said, for me, there's the US component, and then for me, I can buy the XUS because it is also traded in Canada at the Toronto Stock Exchange, so I can buy it in Canadian, but there's also the other component in terms of Canadian dollars. And you can see that in terms of the performance, it has been doing really well. So the benchmark index is the S&P 500, right? SPX ticker name. You can see that it closely mimics the S&P 500, right? Over the 3 years, it was very closely related to the performance of the S&P 500. And um, you can see the results here, but I like to look at the long-term view, right? Because sometimes, some funds, for example, the ARC, that is managed by Cathie Wood, it did very well during the pandemic, but now when you average it out, sometimes, the returns, they don't even beat the S&P 500 index. So like I said, you can see that there is also the US dollar and the Canadian component. So for those that I usually buy the shares, they actually dominated Canadian dollars. You can see that today it was about $83, 83 Canadian dollars, 34 cents when I recorded, because of course the stock price, it fluctuates up and down. And you can see that the fees here, they are quite low because they are about 0.08% management fees and 0.09%, which is quite low compared to other ETFs like the SOXX, which mostly focuses on the semiconductor, which is about 0.35%, and 0.2% QQQ. I will do a video to just summarize these ETFs for you guys. And you can see that, like I said, in terms of the portfolio holdings, it has wide exposure across sectors. You can see that about 30% is in information technology, pretty much like the S&P 500, right? Almost about 13% in financials, healthcare. So it is broadly diversified, but 99.68% of the fund is invested in the US. So what it means is focused in the US. But like I always like to say, most of these corporations, they have operations across the world. So let's say, for example, Apple, they have operations in China and Europe. So at the end of the day, it also provides that exposure to say if in the US the economy has slowed down, and in China it's booming, it might be a good diversification method. And in terms of the specific holdings, right, you can see that these holdings, these are the major holdings. They are not all of them here, but you can see that it's the same story like the S&P 500 as of February 7th when I was recording this. Apple, Microsoft, they have the biggest chunk here, so they are mostly invested in these top companies, but they do have some relatively good exposure in the other smaller or other businesses, right? You can see one share can expose you to all these securities. Now moving on, in terms of how to buy this, of course it's very important. You need to have a brokerage account. Like in my case, I use Quest Trade, and then there has to be some minimum amount that can buy those shares plus the fees. So what happens is that in my case, I just log in, I press the ticker name for this one. In this case, I'm buying in Canadian dollars, so I put XUS.TO for Toronto, and then I click buy, and it gives me the options. And then let's say I want to buy 100 shares, right? So what it means is that at this price, I just clicked the bid price and then I buy. If I want to sell, that means I should hold those shares, then I can then just click sell. Or some people in the margin account, they can just start open a position by selling, which is shorting, and it's very dangerous because there's unlimited loss, in the sense that if the stock then goes up, um, then it means you can potentially lose money. So what happens is when you are shorting, you sell high. In other words, you open a position here, and then with the view to profit, where if the stock drops, then you buy. In other words, when you sell, you borrow from the broker, and then when you buy, you return the shares to the broker, right? And then you take the profit, being the difference between the selling price minus the buying price minus the fees. So and then in this case, I was just doing this for experiment because I was just using my margin account. I just clicked buy, and then it would then, I would confirm the order. But you can see that the fees here for 100 shares at this price, I would have, paid 8,331 plus the fees and commission, right? So, but I didn't, you know, uh, proceed with this because I was just recording this for educational purposes as well. Now, like any investment, there are merits and demerits, but what I like about XUS is that it is diversified, by investing in those uh, mostly publicly listed companies, the top 500 listed stocks in the US. It means it gives me exposure to those companies that I mentioned, the Apples, the Microsoft. So most of the time, if they're doing well, and it's diversified across sectors. So which is good, because if the financials are not doing well, maybe the retail sector or the healthcare sector might do well. So this is good as an investor because I like to have an average return that is good. Now, in terms of convenience, one share will expose me to quite a number of shares, like in this case, like 500. Sometimes you see, if you click on XUS or these ETFs that mostly track the S&P 500, like VOO, you will see like 503 individual stocks, but you find that some of those individual companies, they have different classes of shares. Like, for example, there's Berkshire Hathaway class A and class B, Alphabet and Google, but it's still the same company, but they just have different classes of shares depending on the price or other goals. And then it has lower cost, like I mentioned, it is like 0.08%, which is quite reasonable compared to buying one share, which usually, my broker, depending on your broker, I get charged like $4.95. Tax efficiency, if I'm buying this, I'm buying for the long term, so this helps me to limit tax bill, because I just don't buy and sell. And also depending on the account that you invest. In my case, for example, if I invest in the tax-free savings account, it means if I invest 100,000 and make $1 million and sell, all things equal, then that money is net of I won't have to pay tax. But if you invest in the registered retirement account, what it means, it triggers taxes, because usually there's withholding tax, because the goal is to maximize people to save towards retirement. So if you then want to withdraw before you are 71 years, then it can trigger tax rate for up to maybe 20%. So it's very important to know which account, like to invest in. For example, in this case, I'm just talking in terms of my Canadian experience. It might be different in the US. It is actually different because there are different accounts, right? In other countries, Australia and the UK, but the concept is still the same. It's very important to understand the best account to optimize your returns, right? And the goals, if you're investing for the long term, then like in my case, I don't sell unless maybe there's something fundamental or something I need money. But the goal is to have an emergency fund and not even sell my securities in the stock market for the daily needs that I may have. Then liquidity, like I also emphasize, it is important to make sure that you can get in and get out of the stock, because sometimes things happen, right? um, so if there's no liquidity, then you can be stuck with that stock, and then just hold the shares. So in terms of the downside, um, market risk, investing in the stock market can be risky, because sometimes it goes up and down. I showed you that graph, like it goes like up and down, but sometimes some people panic. So for me, I like to just be mentally prepared for that, because when it goes down, and I really believe in the fundamentals of this exchange traded fund, and I have money, I then buy, dollar cost average, right? I can buy even more shares, right, over the long term. But sometimes it's possible to just buy, and then it drops and you sell and you lose money at that point. So you find that the risk, from my experience investing in index funds like XUS or even the S&P 500, is that it's very easy to make money over the long term if you just don't buy and sell, right? If you hold. But things may change, conditions may change in the market. That's why it's very important to consult a financial advisor, and money is very important to understand, because it's a very important aspect of, at least for my life, I like to know and understand how my money works. Now, inflation, this is the increase in price. If it does happen, like for example in January this year, I think in Canada or the US, also in average it was like about 3.5% for the December data. So what it means, if you make 10% in real terms in that particular time frame, for example, if it was for the whole year, for example, let me just say if inflation was, let's say, 4% for simplicity, and you make 10%, in real terms it's 6%, right? Before you even subtract other fees like tax, if you have to pay tax. So it's very important to understand that. Then the credit risk, like you see that about, let's say, 8% of this exchange traded fund is invested in Microsoft, and then Microsoft, let's say they declare bankrupt. What that means is it's going to affect the uh, uh, performance of this particular ETF, right? But the good thing, at least that would be a better situation than if you were 100% invested in one stock and it goes bankrupt. What it means is your money will potentially go to zero. So what that means is that in that case, it has some diversified risk, right? And then the liquidity risk, like I said, usually I was checking today on the 7th of February when I was recording, the average daily volume was about 76,000 shares. So it's not really as good as SPY and other ETFs, but mostly those traded in the US. But for me, I am buying for the long term. So I buy, and of course I buy other ETFs. But for me, that is very, very important. And also the last and also equally important point is to be actually very clear in terms of the long-term objectives, right? If you want to invest for the long term, then it makes sense to just buy and hold for the long term. But if sometimes you want to buy a house, sometimes it's risky to put the money in there, because if it drops, then you want to buy a house next month, then it means if you sell at that point, you have to lose, you lose money, right? So it's very important to have very clear objectives. So that's it for today, and thank you. If you have stayed this far, please consider subscribing to my channel so that you don't miss out on other content that I create. But thank you so much for supporting me and tuning in. Have a wonderful week. Thank you again. Bye bye.